Welcome to Hidden Force Flux. We're excited to have you join our webinar today. First, I would like to share a quick background and vision of our company. Our software is one of the most sophisticated in the marketplace. Our proprietary algorithm is on par with institutional grade. Therefore, our software might be more challenging to learn compared to others. But there is no free lunch, and it is true in trading in particular. Per our mission, we decided to share this software with all to help you gain the edge. The content in this presentation might be more basic to more advanced traders, so please bear with us. But we are trying to introduce and make an overview of our software. To those who are experiencing an order flow type software for the first time, we advise you that it does take time to learn order flow analysis, and it takes dedication, discipline, and patience. It is very helpful if you schedule an onboarding 30-minute consultation via Skype. It helps customers to get up to speed much faster than without it. In-depth regular discussions are available to subscribers. We are here to help and educate. So let me first read a quick disclaimer. HFF are not registered advisors by any state law and never presented themselves as such. Under no circumstances shall HFF be liable for any loss or damage the user incurs as a result of any trading or investment based on any information or material received through any HFF software, website, or presentation. So let's look at today's agenda. We'll make a quick software overview. We'll then look in more detail at HFF software outputs. We'll also briefly mention our newest software update. And towards the end, we'll have time for a Q&A session, questions and answers. If we still have time, we'll also look at some action in crude oil from yesterday. So let's start with our software overview. Let's talk about setup, instruments, and data feed. To set everything up is very easy. So if you just use the manual that comes with the download, it's called HFF manual.pdf, and carefully follow the directions for your selected platform, you should have no problem setting everything up. It is important that you follow those directions to the T, as not doing so may result in errors that we are not responsible for. We currently support NinjaTrader, Sierra Chart, and IQ Feed, and we are hoping to extend our platform to our software to other platforms. As far as instruments, our software really works with any liquid futures contract. And for that, you need a good, high-quality, unfiltered tick data feed with market depth. We'll get to why we need market depth a little later too. So that's basically it for setup, instruments, and data feed. If you have any particular questions about that, you can email us at support@hiddenforceflux.com, and we'll be happy to help you set up the software if you have issues doing so. Let's look now in more detail at HFF software outputs. There is one common theme running through all HFF outputs, and that is that we display or try to show you manifestations of order flow, and in particular order flow pressure, because it is order flow or order flow pressure that moves the market from one place to another. In rare cases, market moves without the volume, but generally volume is what moves the market. So we have three basic components to our software. The first one is our volume at price chart. So let's look at our volume at price chart in detail. In any box, you can see potentially up to 4 numbers on each side. The bid numbers are red colored, the ask numbers are black colored, The leftmost topmost number is the total bid volume traded. Let me mention that we use 1 minute time frame to build our volume at price chart, as we find it optimal in tracking various volume types and order flow events. So 57 in this case is the total bid volume traded at that price during that minute. Next to it, following a vertical slash mark, we have 12, which is replenished bid volume. Underneath we have 48 swept bid volume and 2 algorithmic bid volume. Similarly on the ask side, 145 is the total ask volume, out of which 14 is replenished ask volume, 90 is swept ask volume, and 25 is algorithmic ask volume. In some cases you will only see one number on each side, which in that case would be total bid or ask volume traded at that price during that minute, as the other types of volume may not occur at all. So what are these volume types, or what do they mean? The total volume is just the usual total volume that you know from pretty much any platform that uses or displays volume. Replenished volume is volume aggressively added to the ladder, so it is absorbing liquidity. It is excellent at early detection or spotting of iceberg orders, and in areas where, for example, bid volume is high, it signifies increased order flow support. Similarly, in areas especially near local highs where ask replenished volume is high, we often find what we call order flow resistance. It is helpful in identifying or confirming potential reversal or continuation areas. Swept volume is volume aggressively removed from the ladder. So for example, if someone puts in a big market order that consumes all the available liquidity in the book, it results in a sweeping action. We also record that volume because it's important to take note of when you are watching how price moves from one place to another. Swept volume occurs typically in areas where stops might have been run or breakout orders have been triggered. Depending on the size of that volume, we can get a better gauge of whether a breakout will fail or hold. Finally, and most importantly, we have our algorithmic volume. It's a special type of volume determined by our proprietary algorithm that uses not only time and sales but also full order book data. That's why I mentioned that in your data feed you also need market depth, because it is used to compute algorithmic volume. Algorithmic volume is a very special type of volume. It is excellent at high precision detection of reversal or continuation points in the market. It is unique in that even a very small algorithmic volume size, be it just a single contract, is capable of the same precision in pinpointing the potential reversal or continuation points in the market. So that was our volume at price chart. Let's look at our next type of chart, which is a delta chart. In our delta chart, we display what we call localized delta divergences and order flow support and resistance. Localized delta divergence is our proprietary version of delta divergence that you may be familiar with, except that in our calculation we use a proprietary method. So it's not exactly the same as the typical delta divergence you may know from other platforms. Localized delta divergences show where increased trade density resulted in one-sided order flow pressure. In our calculation, we are able to pin it down to a single price point, which typically serves as a big picture reference point for future price action. So quite often the price either runs through it or reverses at that point. And depending on what happens, it may result in a future price action in an area of support or resistance. We'll get to it when we talk about crude oil action from yesterday. So our delta chart typically is used as a big picture chart where you see localized delta divergences, which give you pointers as to what has transpired and what is a significant order flow pressure point. Similarly, we also display order flow support and resistance. Those are price levels or precise price levels where significant amount of transactions occurred without breaking them. So for example, in this picture where you see this green line first starting solid, then a little white dot, and then a dashed line, this is order flow resistance. So most likely someone put in a big iceberg order on the ask and the price never went through it, even though there was pressure to the upside. As a result, the price just bounced off of it. The white dot that you see is the point at which we detect this order flow resistance or support. So this is detected in real time. Finally, we also show our volume chart, where we mainly focus on seeing significant volume spikes. This is a 1 second chart, and it is not to be used to watch it all the time. It is more or less used for a quick reference when you see a big volume spike like here, which corresponds roughly to this local high. Then it should alert you to something important going on, and then you would zoom in to our volume at price chart. So now let's look at our software in action in crude oil